All right, very cool. I got the live button in the top corner, and Kyle from the Passive Income Investors actually helping me kick off the live stream this evening. I'd like to take this opportunity to welcome everybody that's made their way into the live stream Friday night in the Independent Investor Channel. Obviously, been rolling out a little bit more of a collaborative platform here. It's a lot more enjoyable to me. It really does promote the community aspect of what we're driving for here. But certainly want to put an overtone to the theme tonight on the live stream. Really want to drill down on what people are doing with this stock market here. There's a little bit of geopolitical, systemic shock right now in the market. I still don't think we know everything that there is to know about what's going on with that systemic shock. It's got me a little bit I'm paying attention, okay, like any good investor should be. But I'd like to give Kyle the opportunity to say a few words. I just had him roll right into the intro with me tonight because we've got 2 hours of grinder time. And this right here is really where the champions are made. It really is, okay? I don't have disco lights like Kyle does in the background. But I tell you what, in all seriousness, if you're making your way to the live stream for your first time, stick around for a bit. You might find yourself accelerating your investment style by listening to some of these great channel creators in the group and also some of the subscribers that make their way into the stream. So Kyle, you want to kick it off and talk to the group here?
Yeah, I always laugh because everybody always in the comments is like, you should do your intro. So what's going on, guys? Today we're jumping into markets at all-time highs. I don't know, trying to have a little bit of fun with it. But yeah, no, it's Friday, man. I like when I get some time off. It's always nice to actually be able to join the community here and yeah, just see what's going on because it has been a wild ride over the last week, let alone month at this point. But I've been watching a lot of interesting videos. It's fun to see both sides of the bear and the bull case. And I know you were talking about going into more safer haven kind of stocks. So I'd love to know your opinion on some of that stuff for sure, considering people are, flipping on the fence here at this point, but they seem to be doing that every year. And I don't know what the plays are right now. Because I remember I was just mentioning to you there that, a lot of the safer haven stocks like your Proctors and Gambles are starting to get like pretty priced in compared to like a lot of these tech stocks as well. So I was curious to what. Yeah, I remember you saying that.
I sold Proctor this week.
Oh, really?
I did. You bet. I did this year. And really just a positioning move, honestly. Love the company. I've owned it off and on for probably the last 3-4 years strong. And I've made killer money. Procter I picked up on the first time when it dipped into the 60s. So if you've been following the stock for multiple years, from a valuation perspective, it's a little bit rich. I actually did take profits in Kimberly-Clark. I was up 10% there, went ahead and shaved that. I may reintroduce that back into the portfolio, but I did not buy any stock. I've been actually looking to move a little bit more into passive. So I'm exploiting my ETF positions in both the dividend payer and the S&P, but those positions are relatively small, man. I'm not getting too crazy with the market at these levels and then trimming back the stock holdings. I'll declare the numbers actually later on in the stream tonight. I've got it all broken down for the group. So, and people can throw tomatoes at me if they want. I may be wrong. I may be totally wrong, but I think something to kind of take away from this is if you can pin me down on what style of an investor I am, good on you, because I really think that a lot of people, if they're prescribing to one style of investing, great, you can make that work. I'm just not one of those investors, and I certainly will not come onto a social media platform and apologize for the way I invest. It's unique, and I try to be as transparent as I can. Some of it's pretty simple. Other aspects of my investing philosophy are a little bit more complex, but I try to be as open as I can and keep the conversation stoked so people can really understand how it is that they can fine tune their own style. That's the key.
Yeah, I won't grill you too hard about what positions you're holding if you're going to share them at the end of the video here. But I'm still going pretty heavy into the markets here, all in all. I'm not too worried. I took some profits off Tesla, bought some Facebook with it. Still pretty happy with Facebook at these levels, but I don't know. I still got some pretty pretty healthy things going on. Even with the utilities I'm finding right now are just crazy. It's kind of neat because this one utility I've been watching, it's really cool because when I was buying it, the PE was super high, and now the price is skyrocketing, but the PE has dropped by like 5 or 10 points. So it's fun analyzing these different stocks as their earnings come in and just seeing what's kind of overpriced and what's not, and just paying attention to those levels. I'm still holding Apple, but I've always been debating on when's a good point to maybe trim a little bit, but I still don't mind holding it for a couple of years just to see what it's got left to nurse. Can you believe, I was just looking at some statistics on it, and since 2014, they've pulled off like 30% of buying back their company. Like, it's crazy how many shares they pulled off the table. So, I mean, I don't know. I'm always debating on how much more upside could be left at this point, but I found every time I've ever watched anybody bet against Apple, it's usually never worked in their favor. So I'm going to play on the side of what's the worst case could possibly happen. So iPhone slow down a little bit, make a cheaper iPhone like they're bringing out in a couple months here. I mean, they're kind of showing those signs of it, but I'm still happy. Like I said, at some point here, though, I've made a couple goals where I'm going to try and re-leverage the portfolio in a way that's primarily dividend focused. But I figure while I'm in a sweet spot, I still want to take on some added risk. So I really, when I bought Facebook with those Tesla shares, it was really tightening for me because I'm like, it's not often that I'll take on like more than 30% in these kind of high flying tech stocks that don't really pay huge dividends. But I can't really complain because it didn't cost me anything. So, I mean, it's my initial investment. Yeah. So, I mean, well, technically that would have been my money, but I have Tesla for free. I got 10 shares I'm holding that cost me absolutely nothing. So I figure, you know what? I plan on holding that money in there for so long. Might as well try and put it into something a little more aggressive growth and see, hopefully, if we can get like another 10, 20% gain out of, say, Facebook this year. I think people also, have you looked at the forums lately for, I love when this stuff happens. If you ever scroll around on the forums, it's the best time of your life because you're going to see every kind of trader that could possibly exist. You see the shorts, the people that hate the bulls, the delusional people, the crazy bull fans that are just like unbelievably like, you know, eyes glistening over for these stock runs. And people keep saying, oh, it's going to go to 1,000. Hold strong, hold strong. They're losing their minds. It reminds me of Bitcoin and like the MJ days, man. I love, I try not to get egotistical about it when you get a win out of it because you don't want to get caught up into expecting that all the time. But it's crazy watching everybody. Did you see? I think they were saying something like Robinhood had at one point, there was something like a few 100,000 accounts registered that bought Tesla all in the same night. And I even had guys on my video saying they were buying in the 800s, and you just kind of, you don't want to be mean about it because you want to kind of jab a bit, but you're like, man, can you not see how hard it is to want to buy here? Like, what kind of just my opinion though, but
it's a good one. I mean, it's fun hearing you talk about it because you're so right. I just, you know, they're breaking the number one rule in investing, you know. I mean, I'm up 85% in my little share. I bought such a small amount of it. It just was how it shook out in my aggressive portfolio. And, you know, I'm up 14% in that portfolio. So I'm more interested in how those stocks are working together. But I only started that account with $5,000. So relatively speaking, that's my exposure to aggressive growth right now. And I'm completely fine with it. If I wanted to double up that position, I could. I've become an investor in these, and I tell you what, it's a lot easier to invest in Amazon in that capacity. Uber's killing it. Uber's killing it. My entry at 26 is great, and that's another company that I wanted to include in that. There would have been a few others in the aggressive growth category that I would have liked to have included. JD.com being one of those that I did not include in that portfolio. But for the most part, I've got Alibaba there. Didn't like my entry at all. But that was the best stock that I wanted from the Chinese offerings to be part of that portfolio. So, but
yeah, I missed that run. I really missed that, and I knew that was when everyone was buying the TerraForce stocks. I should have picked up, but I was.
Yeah, Baidu as well. Baidu was a sleeper. Baidu was a sleeper at 100, and it was there for about a month. That would have been the one to pick up as well. That one now is creeping up to 140. I mean, that's appreciated 40 bits on us pretty well. You know, from a valuation perspective, it's a lot easier to justify JD number one, Alibaba number two. But at these levels, I think Alibaba's just still a little bit rich, but it is included in there and it's performing well. Yeah, you know, hey, to each his own. There's just, an infinite number of ways to make money in the stock market. That's the cool thing. And, I mean, you
Yeah,
can go
I
to,
found the big hindrance though with stocks and stuff like this that I had an issue with back then that I'm starting to try and learn a little bit away from is not just buying dividend stocks. I keep finding that that's the big hindrance with most people because like when I was back looking at JD and those companies back in 2018 on that big drop, I was just in that mindset of, well, I can't find one that paid dividends. They're all growth. Like I'm not buying these. And I started, and after the year or so, I've been unwinding a lot and buying, just kind of keeping those Apple, Microsoft shares. Sure, you're not getting a huge dividend, but I mean, if it can get you to that 80 or 100% return, I mean, that's better than collecting dividends for me over the next, it'll take Apple years and years to pay me those kind of dividends, probably decades. But I mean, I don't want to like batter the dividend community. It's just that I'm trying to, grow my portfolio at a relatively understandable pace without having to think about that I need dividends, I need cash flow. Like, it is about the company having cash flow and growing it as well, and trying to put that, because you miss the opportunities. Like that was a great opportunity and I knew it when I looked at it, and I just said forget it, and I looked at it a bunch. So I feel like an idiot on that aspect because little things like that can really hinder you. Whereas
you learn from it, man, and all these deliberations that you're going through. Dan, you're super young, so you've got to jump. And I don't mean to offend you or but you're young. I wish I had that kind of maturity when I was your age, because when you're my age, right, you're going to have evolved to such an amazing place, because you're going to learn to trust your instinct, and you're going to let bygones be bygones as well. And I think your instincts are really they're gonna serve you well, man. And I don't think people trust themselves enough, and then they make one mistake and it's like, well, to holy hell, I'm the worst thing that's ever happened to the world of investing, and they give up and throw in the towel. The investing game isn't one of those things that is going to allow you that type of self-deprecation. It's not. That's just the game. You got to have a short memory. You got to get over it. You got to trust your instinct. But you're right. For all the woulda, coulda, shouldas that I've ever had in my life, man, they compound as you get older. But then again, I do enter a lot of positions that I do win at, and there's a lot of people in this community as well. If you're involved in the stock market game, we're not coming together every Friday to talk about something that people lose at. If you do it right, you're gonna have some opportunities to win for sure. And I think it really comes down to, in one word, awareness. I really do. Just gotta pay attention.
Word. Education and awareness, man. Because if I lost money on something that I made a decision on and I didn't do my homework well enough, the only one that I'm beating up is myself. That's why I try and educate myself as much as possible. So if something comes out of the wings that knocks it out, at least I can say it wasn't my fault. I always kind of hold myself responsible for my decisions, and that's why I have such a hard time like over accumulating, because I always feel like I want to kind of be inside of these stocks, and once I get comfortable, I can reanalyze once in a while. But yeah, it's that knowledge thing will crush you, man. Because a lot of people in the real estate world have been watching a lot of concrete lately, and I've noticed a lot of these guys. There's always someone out there that's saying it's gambling. There's nothing more gambling than the stock market. And it just reminds me of, it's just, how are you looking at it? Like, I don't understand how people look at it other than just the numbers going up and down.
Justin Snowden says we make a cute couple, man. He hasn't seen my wife.
Man. Have you ever had your wife on the stream at all?
Not on the live stream. No, we made a video together, and it was super good, man. I don't make a habit of it, but yeah, we did a couples, because I think when you introduce somebody else in your life, man, it really does make the financial piece of it so much more enjoyable. I make it that way. I don't know if a lot of people out there thought I was going to say difficult, but it doesn't. It just makes it more fun, because we come from different perspectives, just like me and you come from different perspectives. I mean, I'm 42, Kyle. You're in your late 20s. We're coming from different generational perspectives. And you talk about the overload of information online right now. I can revert back to a time when there was no information available, So I think the contrast is awesome, but we're both trying to get to the same place. That's what I think, that's the cool thing.
It's a pace and a half, man, for the financial stuff. But I think it becomes more of a, like I was talking to Matt a little while ago. I just remember him saying that business is more like a sport than it is than it becomes the journey. Because at some point here, if you start getting deep into this, you're really just going to be playing, buying and trading businesses. And I don't think that gets boring when you get into it for long enough. Because I think once you get that stock hook, like, and you understand that you're actually looking at the entire world, and you can pick
Yeah,
and choose what part of the worlds you actually want to own, it
yeah,
becomes like that's that awakening to that gibberish and those numbers and all the talking heads on CNBC. Like when you actually grasp that reality of what you're looking at on the stock market, I
yeah,
mean, it becomes a beyond version of chess. Like it's and like we were talking about before, right? Like it doesn't matter who you're talking to, whether they're a billionaire or whatever. We're all playing the same game. And heck, like all of us people that were holding Tesla just beat Steve Eisman, and he had a crazy large short on that company. And I mean that doesn't happen often. I want to make it out like Tesla's trading on its fundamentals right now because that would be ignorant. But at the
yeah.
same
But this
time,
is a
like
money game.
it's just
This is a
crazy how you could.
money game.
Yeah,
It's a money game, and I tip my hat to you guys. I mean, I'm feeling pretty proud with my. I don't even cover the stock, man. I don't research it. I know they don't make money. I watch their earnings report. I mean, they just failed short on a milestone this week. I'm surprised the stock didn't retract
same.
$300. I mean, really, there was enough reason. I don't really, as a value investor like myself, and what I look at, I don't understand what's going on. Um, I'm glad to have my little piece to it. That's all great and plenty. I'm not jumping up and down about it. You made a good move, pat yourself on the back for a few seconds, and then move on. You know,
Yeah,
because your investing career is not going to be predicated on being able to duplicate those moves, because
yeah,
stocks like Tesla do not trade very often like penny stocks, and that's what it acted like for that 2 or 3 days. It
yeah.
acted like it just where it went parabolic. Penny stocks do that, you know, and then it's the pump and dump, and that's what ends up happening. But it's holding pretty steady here. I'm pretty surprised, but I
I
think
think to a good point, because Jim Cramer, he wasn't a fan of Tesla for a long time until like he finally opened up about, like, I thought was a really good opinion on what's happening with Tesla stock, because you compare it to the same thing in the past, because this isn't like completely unusual. It's just at the pace that it's happened at seems to be bubbled in just in the time frame. But you compare it to something like Netflix, like Google, Facebook. Like when you look at all these companies in a short time frame, they went up a stupid amount of money, and people just kind of forget about it and move on, and then they make it out like it's almost impossible. But I think it's the fact that Netflix, these certain companies that like didn't make sense, like Amazon back in the day, I think it came down to that fundamental, that it has some core factors to it that are undisputable in the current environment, and trying to add a value to that is almost impossible. And the problem is that so many people like ourselves would be analyzing the fundamentals and look past like what could be. And that's all it's trading on, is what could be. And because it fits that golden goose so well, finally the whole world just went from being the most shorted stock to, this has the most potential stock. Just, and
yeah,
it all happened in this really short time frame, right? But again, I could honestly be happy seeing it drop back to 3 or 200 in my personal opinion, because at this point I don't care. I didn't care really in the beginning. It's just hard not to want to take profits. I mean, I still plan on holding it for the next 3 to 5 years just to see as a gamble play. I'm glad it's not costing me anything anymore. But like you said,
yeah,
I'm shocked it's still holding up here. I think by fundamentals, if we're playing by fundamentals, me and you know where this stock should be playing, but
yeah.
the world
I
doesn't
know.
put it that way. Because what is Netflix trading at right now on its PE? I mean, it's still pretty ridiculous too, isn't
It's
it?
it's crazy. Yeah, really, that's part
Um,
of my aggressive growth portfolio as well. And that would have been a stock. That was the most. That was the one I was the most worried about. Netflix and Tesla, those two, because those are the two most irrational,
yeah,
in my opinion. But it's
but
a
in a good
big decision.
market.
Yeah, exactly. It was to gain a little dab of exposure by the best in breed of the streaming. So that's what I wanted. You know.
I got
So
an interesting stock. I'm not sure if you looked into it. So the lady that's been, so I can't remember her name off the top of my head. She's been screaming that Tesla's going to like 14,000 from ARK Invest.
yeah,
I started deep diving into their portfolio, and man, she has some fascinating stocks in there. I was really
yeah,
analyzing her stocks. There's one called Edit. There's three pharmaceutical companies that own patents to the genetic code modifying, and they've managed to edit HIV right out of your DNA. And they're saying it could potentially be the cure to cancer and pretty much knocking out any genetic issues a human has. And they
Yeah.
did tests on 2 Asian babies in China that can't get HIV, and they're showing that they have a more stimulated brain growth too with what they've done. I don't want to get technical because it probably bore people to sleep, but I just find the technology they just discovered, the fact that they've actually learned how to specifically edit parts of genes. I don't know anything about it, but you should screen through some of that ARK Invest ETF, because man, the stocks they're holding and just looking at some of them, it's
I think
staggering.
I caught an interview with her, I think, Kyle, when she was talking about Tesla specifically on
Yeah.
CNBC. I thought it fascinating as well. I thought it was awesome. Really, really justifies her positions. So I booted Snowden out of the group. I don't do this to waste my time. I don't do it to waste Kyle's time. I'm just respective of everybody's time in this group, certainly. So he's gone, and won't let him back in again. Honestly, here's the thing. When you come in and you check out a collaborative live stream like this, I'm not doing this to be one of 100 other channels out there doing the same thing. Okay. If I thought I was one of just a drop in the bucket or a channel that was offering content that everybody else was offering, you would never see me again. I give you that guarantee. But for 2 hours, this is that awareness piece. And if you just open your ears for 2 seconds and open your mind, you'd be amazed at how this 2 hours could have the potential to change your life. So for the people in here that, use your wrenches. That's why I gave them to you. Kyle, I haven't awarded you a wrench yet, but honestly, I really take this time seriously. When we're talking about this, we definitely have fun on this topic, because I'm here to celebrate that trade you made. That at the end of the day, that's what it's about, is making money. I'm not doing this to be part of a club. I'm not doing this to, generate my social, involvement. I'm not doing it for that. I'm doing it to really, really exploit those ways, like yourself, that are using the stock market and capture, and also have the ability to come on and share those wins with other people, because you don't have to do that, and you do. And I just want to take a second to acknowledge that, man. I really do.
Yeah, no, I think people underappreciate the community and the access to information they had, for sure. I always remember that one saying about YouTube from this older investor, some big miner, I can't remember what the guy's name was, always used to say that if you go back 20 or 30 years, your dad would have been so connected to sit at a meeting, like a Berkshire Hathaway meeting. He's just like, you've no idea the privilege of just having access to what people are doing, and the fact that they're willing to share it the way they are. I mean, you have access to, I think people underestimate how connectable and reachable even high level people are. I mean, I've talked to Kevin O'Leary twice now. His YouTube channel opened up. I caught him on BNN once. I actually called in. I know, I've just realized at this point, like, if you have a question or concern, you can literally, without paying. When I was a kid, I paid people to have to learn parts of my career. And now, now I was 16 back then. Like, YouTube was just becoming a thing. I was paying people $400-$500 to work with like these celebrity people in my field that I wanted to pursue. And now it's just like, you don't need to do that anymore. If you just want to sit here and, just call them up when you catch them on a live stream on a weekend, right? So, I mean,
That's crazy.
I think people underestimate the value of how, again, you go on, look at, we have the Golden Globes on right now. What are people going to be watching? They're not going to be watching this.
Here's the thing, man. People in life are going to always be their own worst enemy. Always. And that's one thing, man. I pride myself on being able to find that spark of opportunity in people that sometimes they don't see themselves. I see this all the time, man, when I sit down and they're like, I see people that are succeeding with investing. Can you just tell me a little bit more about that? And they really want, it's that spark, but they don't know the first reason as to where that spark's coming from, That's an awesome thing, because those people right there, they want to learn and they want to evolve, and they realize that it's not going to happen overnight. But I tell you what, if you can't get motivation from me, you're probably destined for some other place. And good luck to you,
I guess it's really funny. I'm sorry to sidetrack here. My girlfriend just texted me that it's the Oscars, not the Golden Globes.
Oh, fair enough.
that's
Yeah,
that's
fair.
how much I pay attention right there.
I
She's just
think it's a
sent me
colossal
texted.
waste of time, to be honest with you. That's what I call it. Yeah, I don't glorify that group. I met my wife in Hollywood actually.
Oh, no
That's the
way.
ironic, funny thing. Yeah, yeah, that was our first date, man. Hollywood
I
and
can
in Santa
imagine
Monica.
it'd still be a surreal experience though. I mean, after
It's
you watch all
awesome.
those movies, just to go and hang out in
Yeah,
Hollywood during something
yeah, it
like
is.
that, like not even to get caught up in it, but just to walk around, you'd see
It is.
probably a
You
lot of
go to.
interesting people. Yeah.
It is, man. You go to some of the clubs and some of the bars, and the people you meet are just awesome. Just awesome. I got a special place in my heart for LA. I really do. But as far as watching it and glorifying it on TV, no, I'm good. I'd rather come onto the Independent Investor live stream and talk with you, man. So talk with my
Yeah.
boy from Canada. Jeez.
I appreciate
Uh,
it for sure.
yeah, it's a lot of fun, man.
Just I guess what do you think of the coronavirus right now?
Well, that was that systemic risk that I was talking about.
Yeah, that's why I wanted
I
to.
the little bit that I've been able to dig a little deeper on is that it's more serious than what we think. I think I remember a time in the market, and I know I haven't seen Matt Money pop in here just yet because I really like his angle on the oil market. But I remember a time whenever there was a little ripple in the oil market, the market would go down 150 points. Now it's not that big of a deal, but I'm telling you, anytime there was a little ripple, that systemic ripple would really, really impact the market. I don't think the market has quite figured this out yet, which is kind of scary. So
Yeah,
my question is, how many people have to become infected? See, they don't know in China. That's the problem. We know here in the United States because the testing capability is there. They don't have that capability in China. So it's a guesstimate right now. And the
yeah,
guesstimate at 25,000, that's enough to take serious. 500 deaths. And the original doctor that message went viral. I had somebody in my community, which I won't name names, provided that to me, and it got taken down right away. So I really appreciate that. That 34-year-old doctor is dead. You know,
yeah,
so it's serious, and I'm paying attention because these are the types of things systemically that can kind of put a crack in the market initially, and then it
yeah.
becomes more than a crack.
Black Swan event. We're just not sure how Black Swan it's going to be just yet.
Yeah,
But I think it's fascinating to see. I was joking before about playing this game called Pandemic, and it reminds me so much of how, like, it's weird how if a disease like SARS is more deadlier, it's way less infectious. Whereas if it's more infectious, it's always less deadlier. But at the same time, that virus has a 2% death rate to it right now, which, to put in perspective, with the regular flu is like 0.08 or
yeah,
something like that. So I mean, if it does become that viral, it'll be one of the most, largest killing diseases that have ever kind of just swooped in, aside from SARS and Ebola, because I think it's
yeah.
worse than that now by death rate, isn't it?
It is. It just
Yeah,
surpassed SARS, and it's not just the death rate, which is alarming enough. It's the transferability, um, and how easy it is to transfer it to another human
and
being.
if it can
That's
mature too,
scary.
right? Because if
Yes,
there's nothing saying that it's not still growing and it could become more deadly. But I mean, that stuff is fascinatingly terrifying. It's almost like a nuclear meltdown. It kind of gives you those
yeah.
same vibes, but no one seems to
That's
care right now.
you
I
know.
honestly thought it
Well,
would have.
that's true. It seems like no. It seems that way. And
Yeah,
I call the BS flag a little bit. And I know people who have tuned into me for a long time. They expect me to be the voice of the reason, and I'm not freaking out. Okay, but it helps to be honest. Okay, don't stick your head in the sand. Be honest with what's going on. I'm choosing to take the posturing that I'm taking because it makes sense for me at my
yeah,
age. 42, I'm good.
yeah.
And I'm going to disclose those numbers just on a breakdown. I'll drop the totals to you guys now since we're within the first half hour. And I know the core group will remain in here for the full 2 hours. I know that. But right now, 41% in cash right now. About half of that cash is tax protected cash. Okay. So kept some core positions in the stock, the long stock that I've got trimmed All those were sold for profit, all those in there. The passive investing aspect at about 32%, and the stock portion at about 26. So the dollar amounts break down like this: about 133,000 in cash, 102,000 in passive investing to include the bond aspect of that portfolio, which is about 30%. And then the stock portfolio at about 84,000. That's what we've got. So some positioning across the board. So you can't really put a thumb on, I've got some aggressive growth to scale. I've got some bond aspect to scale. I've got some dividend growth to scale. And I've got investing, passive investing to scale, and a good piece of cash. And I'm good right here. I'm good. I'm going to give this a good chance to let this market ripple. Not only that, but my sixth sense, if that exists at all. Okay, let me just premise this comment and say that it doesn't exist at all, because chances are I'll probably be wrong, right? There's also a chance I could be right? Give me a little chance of an opportunity. The market came back a couple hundred bits today. I thought that was pretty conservative, to be honest with you, but we're going to open up a new week next week, and we'll see what happens. But I'll live to fight another day. I'm perfectly fine with where we're positioned going into next week, into this year, into an election, yada yada, and so forth. We're good. So.
I'm trying to avoid making any drastic bets here. I always try, and as soon as I start thinking about, oh, should I make it? The same comes back to the gold discussion. I hate precious metals with a passion. People are loading up. I get it. You got a lot of money. You want to own some, sure, go for it. But the reasons, I was going to do a video on Robert Kiyosaki again, because his investment advice, in my opinion, is just absolutely horrendous. Because he doesn't even buy gold to plan on selling it ever. And it's just not investment advice for people like myself that are actually trying to get somewhere. But to put it in perspective, I liquidated $30,000 worth of gold. Last year, I sold off 20,000, and that 20,000 is now worth 35. So, I mean, it's just like, gold went up a couple $100 since I sold it, but I've made, it's just ridiculous to me to hold an investment that can't.
Well, how did you what was your thought process to enter into that initially? Can you?
Yeah, of course. It's the same reason everyone gets into it, because they grow up to listening to people like Robert Kiyosaki. The first investment I ever bought was precious metals, and I stacked 50% stocks, 50%. Well, it ended up being like mostly metals in the beginning. Wow. Just because of fear, man. It was fear. That was what, 5 or 6 years ago. I was just terrorized. Awesome. I'm like, you know what? I'm going to take strides. And then I just progressively learned to realize, like, this stuff's dumb. I'm always worried about it. Like, it doesn't, like, what are you going to do with it? You have to sell it, and then you're done with it. Now what are you going to buy? Like, I just don't get it, because it's just, people don't see the value of owning, like, even investing in an education or a business outside of the markets. Like, anything is a better investment to me than precious metals. The markets crash. You're going to want to own a farm. You're not going to want to own precious metals. Nah. Like, I don't get the vibe. To me is just nutty. It's like, it's gambling. It's so speculative.
I don't think gold or silver is an investment at all. I don't refer to precious metals as an investment at all. I always premise it as a hedge. That's it. Because it's just a currency hedge. It is. Kevin O'Leary he's got a good philosophy. He's your boy. Kevin O'Leary, 5% of the portfolio. If you want to own gold, if it goes up above it, sell it back to 5, right? If it goes lower, buy back to 5. The reason why he does that is because it really is just a hedge in the portfolio. That's it. It's to protect the portfolio against that unlikely catastrophic downturn, which is really going to spike that. But I tend to look at more of the intangible downfalls of owning precious metal. I just think owning it in my house is a challenge.
That's huge liability.
I mean, huge liability. Man. Yeah, I don't know. That's my thought on it. I've never really owned it, so it perks my curiosity as to, you getting into that much. That's awesome. Crazy.
Yeah, it's you get addicted to the cycle of it, because if you especially watch a lot of the community, like I watched a lot of like Silver Slacker. There's a lot of guys out there with like probably $1 million precious metal stacks. And it's just, you're building a house that is silver. I don't get the point of it. But in the geopolitical debates, I had this really funny thing going on this year, because I don't like gambling on stocks. But the one stock I bought that I kind of accidentally walked into this problem was my GEO group. And this is the big year, because this is the year when the stock decides it's going to pop or drop on me. Because I didn't realize this stock was so heavily depicted upon who gets voted in, even though they don't make a real substantial impact like the fake
That's the
media makes it
prison.
out.
That's the
Private prison
prison, right?
sector, yeah,
Okay.
all the
Yeah.
a lot of fake news. I think people underestimated the fake news that went around that was trying to abolish the private prison sector, when they're now making more money than they ever have. And the stocks have dropped like 30-40%. But the problem is I looked at the last election cycle, and it did the same thing, where if someone got in that was against that part of the a part of the country, whatever, they'd actually just, start mitigating some of the way they're allowed to charge for commissaries and stuff. But when Trump got voted in, the thing went like parabolic overnight. And I just realized, like, come November, I'm going to be sitting on edge here to see what's going to happen, because I don't really, I'm not saying Trump should get in here. I don't really care what you guys think politically. I won't get you into that debate in the topics or the
Yeah.
comments below. So I won't ask you what you think about that. But
No, I don't mind. I don't mind. I'll answer it this way. I just don't think it has as much to do with us common folk that get up and go to work every single day. At least I don't
100%.
allow. I don't know, man. I don't spend that much of my time, as little as I possibly can, thinking about that aspect of my life.
It's so true,
the
man.
truth.
I think Warren Buffett was saying that, like, I don't think it was Warren Buffett, but one of these guys that I listen to is just going on about how it's like me and you that make up the whole economy. It's not like you care about these politicians, but if we're not showing up to work, or these parts of the economy don't function, they're just the political face of it, right? But I guess once in a while I get to click the bomb button.
I think at minute 36, Kyle, where are you seeing value in this market? I see this from Personal Finance Channel, and I just pushed it up here so people know this is a new channel as well. So it's harder for me to do the shout outs when I do collaborations. So this is why I share the comments on the screen. So if you see them pop up here, that's what I'm trying to do, is kind of get folks exposure as well. I think Pfizer's a buy. Pfizer's one of those large positions that I actually cornerstone in the portfolio. It will not go anywhere. 4% yield, price to earnings, if Kyle's looking at it, I think is relatively attractive here.
13.
Yeah, so not relatively, it is. Whereas Merck, I did go ahead and liquidate the final piece to that portfolio. So, and of course, Johnson & Johnson, I won't sell. But
yeah, I love J&J. But when you're looking for value, that's pretty much perspective based. I think there's always value in the market, and I've been looking at a ton of stocks I would consider value, but don't fit my investment style. I know Carnival Cruise is one I've been looking at a lot, and it seems to be in crazy good value right now. I still think Facebook has some extreme potential behind it.
Oh yeah.
Even though the numbers are slowing down, but people are looking at the wrong stuff, because they have not really increased ads. They haven't monetized WhatsApp. Instagram still has room to be monetized.
Yeah.
Like, it's just, people are missing the crazy amount of value that this company could be, 100 billion.
It's the cheapest. It's the cheapest growth company that you can buy right now it's everything across the board. It is the best buy for sure.
I have a love and hate relationship for it, because I really hate the platform with a passion. I've always had issues with it. But I can't get past the balance sheet. I'm like, as much as I hate it, I can't argue the facts. And this company has
fist. Yep. And companies have to prescribe to the Facebook model. Like, there's not a major company out there that doesn't have to employ Facebook. That's the key.
Yeah.
You can't just not do. Could you imagine Coca-Cola without Facebook? There's the question. There's the justification. Where do you think all their money comes from? It's because all these large companies that have to do business with them know that they are number one, the premium platform, and they're just dumping money into these platforms. I do like Instagram. I think Instagram's awesome, but I agree with you on the Facebook platform. It's a different genre too, whereas I think the younger generation really does prescribe to some. I don't want to speak for you, for your generation, but I think that's important to point out, where that growth opportunity is in social media. So,
yeah, but I honestly think, man, you're going to find value out there all the time. Even a good company takes a good dip as a buying opportunity. Like Johnson & Johnson, I took that buy. I bought it from the 130s to the 140s, and to me, that was steal of a deal. And it wasn't cheap. It was by no means cheap.
You've got to focus on that stuff right there, man. Don't focus on that stuff that you didn't do. That's legit, man. You're the first one that's come onto YouTube, man, that I've got through my community or comments that has said, "Hey, I really noticed J&J take that little bit of dip, and it was not related to any of their talcum powder issues. You know, it was just it took a little dip. I don't know why, and it was
A lot of negative
buying.
news. A lot of negative news.
Yeah, it was. But look at it now. You know.
Because I
Yeah.
mean, if anything, anyone should sit there and take maybe the top and 20 S&P companies and just watch them periodically. And when one like that takes a reasonable dip, don't expect a huge dip, because like McDonald's went on a dip and it didn't last very long. So I mean, when you're looking at those companies, just keep them on your back burner, because I always look for better deals out there. But if something on the top 10 list takes a big dip, I mean, it's definitely on my buying list, because you can't lose with those companies. What's McDonald's doing here?
It's jumped up pretty good from that.
Yeah, I watched it. I watched it on that dip, and I'm just like, this is a buying opportunity. But I ended up loading the boat on, I think at the time, J&J and along with Tesla, which worked out pretty well. But it's just things like this. Like, this stuff is easily noticeable, right? Like when McDonald's or any of these stocks do something like that. Because that was from what, October of 2019. That was dip, didn't last very long. You only had a couple months. And then if you would have made a 10% return within a couple months, collected a decent dividend. I mean, those are the real wins. Like, I wouldn't try and make the home slam runs with Tesla on a regular basis. I'd rather collect those wins and call it a long-term game.
You got to be careful. I mean, seriously, man, Tesla is setting up to disappoint a lot of people. And I'm not going to be the one. Look, if you want to come to me and you want to cry about it, I'll say, hey, it'll be okay, you know, if that's what you want. But honestly, man, do what you got to do to avoid that temptation. It's not as easy as you think, because I'm not going to tell you got lucky, but you got a little lucky.
Huge. Come on, I've got lucky. I got lucky twice, man. I got lucky twice. I got Canopy, and I got Tesla under the belt. Even if I held Canopy still, I'd actually be up higher from where I bought it and sold it. But at the same time, I mean, I think you can collect hype. I really think they need to make a metric, a stock trading metric for hype. Because I saw it coming with Canopy. I did not expect it with Tesla, but it had the formula. Like, I felt the same vibe off Tesla that I got off Canopy, where you knew this wave was going to come at some point, and you just didn't know when, and then you couldn't expect it to be as big as it did. Because I mean, I didn't expect Canopy to do what it did either, but it had that same. I wonder if someone out there has made some kind of a hype formula for looking for stocks that have the potential for parabolic moves. Because I mean, day trading is kind of a joke, but I think you can.
I want to let Anthony, because he's holding a freaking shark, ask a question. He says, "Are we allowed to ask general questions?" So I'll let you know, Anthony. So the forum here has changed. I've done the live stream now a couple years anyway. I used to just run it by myself, and it was pretty engaging, just me and the crew. I've since started this collaboration. I think it's a little bit more fun, but it attracts. So Kyle's a channel creator. So I like to bring the collabs on, and then there's also channel creators here in the thread. So you can address anybody you want in the thread by just using the @ and their name, and they'll respond to you directly. But absolutely, man, shoot your question at us. That's the whole point of this. But it's hard for me to crack sometimes through the StreamYard. It's a little bit more finicky unless I kick back and forth to YouTube anyway. But man, please shoot your question. He says, here, I'll throw it up on the board. I ended up with 400 in free stock with Robinhood, working on cleaning up my portfolio. That's what I felt like I did this week, as a matter of fact, and turning the stocks I don't want into solid dividend stocks. You want to take a crack at that first, Kyle, and then I'll offer mine?
Sorry, can you just reiterate that there real quick? Sorry, I missed. I was just reading through that when you took it up. I was looking at the comments in the stream there. But so you said I ended up with the $400 in free stocks in Robinhood, and we're going to clean up the portfolio and turn the stocks I don't want into solid dividend stocks. Yeah, depending on your situation. I mean, that's usually a good thought. You sound like. Did you have any problems, Anthony? It sounds like you might have had some issues, which I'm not sure if that was why you were cleaning up your portfolio. I'm not sure what you meant by that phrase. But yeah, if you have a question too, man, you guys should call in. You don't even have to bring your face on the stream if you're not comfortable with that. You guys can call in too. It'd be fun to get some actual conversations going with everyone else too.
Believe it or not, I'm just a regular guy. Yeah, just a regular human being.
We all like
pretty awesome, loyal community here. None of us are viral by any means. But I don't know. There's a common thread in this group. Absolutely. There's portfolios ranging from starting investor all the way up to multi-millions. And I think the common thread is such that we all really enjoy investing. Absolutely. And I think there's an additional thread as well that enjoys helping people. If you got 400 in free stock, I'll offer this. Kyle said it right up front. It's kind of cliche, but it's the right thing to say with regard to your situation. Really just depends. In the investing world, I'm not going to blow smoke at somebody. $400 is a relatively small amount of money. Okay. Can it be a starting amount? You bet it can. It can. And if you're serious about becoming an investor, I'd really like you to look at that as just that, a starting amount. Okay. You're not going to be able to buy the entire stock market with $400. If you are interested in single stock, or you're interested in becoming more of a passive investor, try to identify what type of investor you want to be. Okay. Go ahead, Kyle.
Yeah, I think it's the debate on, because it's just the way he asked the question. I was just curious if he ran into an issue when he means cleaning up his portfolio, because I'm curious if he ran into some problems and decided that he was going to take the safer dividend route. But that's not, in my opinion, the best way of thinking. But yeah, you got to ask yourself, man, are you bringing in more money to add to the portfolio? How much? Because that would be better for the dividend route. But if maybe you were like me when I started with my first 500, you might be better off buying an individual stock that has the potential to do a 20, 30, 50% run in a year or two, because that's small. It's so hard to say that, because you remember starting off small and what it feels like and how impactful it is. But now I'm the guy sitting here saying, like, it's not a whole lot of money to start with. So to think about going on the dividend route, if you don't have extra capital to add, it's kind of a waste of time, in my opinion, especially when I look at, like, if I had no money and I just stepped in today, like, I would be more appealed without my ignorant knowledge to something like a Facebook than to a dividend stock, and getting too comfortable with the idea of being super safe. Because it's kind of, there's, dividend stocks have the same kind of issues that any other stock's going to have. So don't always get hung up on those dividends, especially for those high yields. Like, I hold a lot of high yield stocks too. Like, my GOs pay me 9.5%. I mean, MO, but at the same time, I'm owning stocks that pay 2%. 1%. You got your stocks that don't. Like, it took me so long to adjust to that reality, but you can find a nice balance of the both, and then you end up in this sweet spot where you end up with that 4 or 5% yield holding great companies. But yeah, I don't know if he added to that or not. But what do we got going on here, Anthony? Oh, I know it's starting amount. I'm adding significant money monthly, just trying to figure out what to do with these stocks I don't really want or don't know about. Yeah, man. Well, you got to start digging and learning. If you got extra money to add, start digging and learning, man. I don't know how old you are, but I'm young. So, I mean, age has a big factor. Like, independent there, like he said, he feels more comfortable taking a bit off the table. I am pretty much 100% in, aside from the extra capital I leave laying around for my basic expenses. So, I mean, I could be fine with a 20, 30, even a 50% drop. I mean, it would rattle me. It would definitely be a rattling sight. But at the same point, I mean, I'm at an age where I could ride it out for the next 3 to 5 years and keep adding capital, because to me, it's just discounts, right? But
I would think, we've talked for a couple of minutes, and it's also the most boring answer to offer this as it's an option to just buy the S&P 500. I really think that the passive investing opportunity, depending on your age, because to Kyle's point, if you're a little bit older and you don't quite have the time to really allow that compounding interest to take place, ETF investing may not be for you, but it is an option out there, and it's a damn good one. So it's worth exploring that option and really picking that option that's best for you, for your current situation. Don't just invest to invest. Don't do that. Have a set goal for your program, and meeting the market really is one of those kick to the side opportunities that a lot of people, they always want to go for the dividend investing or the growth investing. You're either going to do one of two things. You're going to either beat the market or you're going to underperform the market. So you just got to be honest with how your portfolio. We talked about this, Kyle, a couple of weeks ago. You got to be honest with yourself. And I like dividend growth investing for the right portfolio. If you're sitting on a sizable amount, you will really benefit in a down market because you're always getting paid that guaranteed dividend. You're looking to preserve a little bit of income. Owning a Coca-Cola is an easy stock to own. But when you're starting out and you're starting out with $1,000, what 5 stocks are you going to buy that are going to stack up against the S&P 500 year in and year out? I think that's a harder question to answer. And I think people would be pretty surprised if they actually found some courage to look into just that. Jared Odell alluded to this last Friday on my live stream, and it really caught my attention when he said what he said about comparing his single stock portfolio to the passive ETFs. And I'm seeing a little bit of same in my portfolio, man. Those ETFs are pretty awesome.
Yeah, I'm kind of under celebrating my portfolios because I had 2 accounts cross over 100% return just this last week, and I'm looking at it and it's just like meh. But I mean, like, trying to celebrate a little bit of that as well. I'm having a hard time getting over the just another number day. But it blew my mind, man. I'm looking at these accounts. They do a good job on the Scotiabank thing for calculating in how much tax you're saving on top of the dividend payments and the growth.
Yeah.
So I mean, it blew my mind that, like, I opened my RSP maybe not even half a year ago, and it's already doubled. And same with my regular TFSA has gone up 100%, and it's only been around for 3 years. So I mean, it's mind-boggling to see, like, if you buy those right investments, and it doesn't take that much, guys. I mean, when I started doing that, I was 23, 24. So I mean, to say you can't outperform the market or being too scared to take the risk I think would be a bad idea, especially if you're starting out. Just to put a little bit in there, like you said, like finding those 5 stocks you really did a good job on and seeing if you can do the same. Because I mean, that's all I've done. I've done this holding less than 12 stocks. So I mean, the only way you're going to outperform the market is by taking on that kind of risk. I just can't. You're not going to get it out of the ETF. So I mean, if you're listening to somebody like me kind of gloat a little bit, at the same time, like you could easily do the same thing I did. I have no education in the field whatsoever, and I'm outperforming some of the best hedge fund managers, and I feel like an idiot. Like, I go into this like I have no idea what I'm doing even today. Like, today I'm on edge, but I've got a little bit more balance, right? So it's
I think
and that could hit.
I think you pay attention, man. I really do. I think to each his own. I don't think it's as easy as you think it is to scale. For example, I don't know, man. If you took 100 people and put them in a room and put you in front of them, if I was one of those 100 people, I'd be pretty excited about investing. I'd be like, man, this guy's fired up. This is awesome. He's killing it. He's doing really well. But if you put those 100 people into motion and you said, here you go, here's the knowledge, and you could take as long as you want to try to encourage, to coach, to teach, to do everything that you could possibly do to empower people, you would have 100 different results, Kyle. So it's tough. I'm usually a little bit more careful with saying, yeah, everybody can do it, because here's the thing. Remember what I say, man. It's been super easy to be an investor over the last 11 years. It's been easy. See, I remember
100%.
a time before 2010, and I think we've really fell asleep on this deal. I've benefited from it. I've grown a lot of wealth, but I hate to be the wet towel, you know what I'm saying? But at least it's worth spending a couple seconds to throw it out there for people so they don't get so excited and they hear this guy like, wow, this is awesome. I can do it too. And they can, but there's some work. You put in the work. That's the
Stupid
key.
amount of work.
Oh,
I put in a dumb.
it's not work to you. I don't
No,
think it's work
that's
to
the
you.
thing. That's the thing, right? Because I remember, like, back in the day when I used to do a lot of DJing at these clubs, I'd be sitting there with my laptop open looking. I just remembered looking up, like, Northland Power when I was first buying it, and I was reading all of their annual reports, sitting at this club, just flicking the track over, going back to reading all the forums about it. And that stock's done unreal for me. I mean, it just did a huge pop, and I'm seeing a 30% gain on the new shares I bought after being up 50% on it in the past. So I mean, it kind of reminds me of those times when it's just like it's more of a hobby, but like I can't get my mind off of it. So yeah, I think if you have the right motive and you're willing to learn and you actually have the drive to sit there and, like I said, be a real investor, like realize what you're buying into and
Yeah.
kind of falling in love with it. I mean, that's the reality of it. If you can get to that point, I think what's the saying? Like, whatever you put your mind to, you're going to do well at, right? Like,
I
if
think
you got
so.
to, and it's the amount of attention, and you'll judge yourself. You'll know if you're slacking. Like, it's pretty easy to tell if you're not. You know when you're not cleaning your room or you're doing the dishes. Like, you just know you aren't doing it. It's the same thing with the stock market. You know when you're getting lazy and kind of slacking off at work.
Yeah.
Like, there's no difference. So you can gauge that out. But if you're young, you're going to be in that awkward boat where you're going to make some mistakes. So it doesn't matter what I tell you. You'll find your own way if you stick around long enough, or you're going to go broke trying. One of the two.
It's tough too, because I have a lot of people and they're really genuinely interested in the stock market. I just think that a lot of people can do themselves a favor by evolving into becoming an investor. Don't be in such a rush. You know, I think you part of what you said I agree with. You know, take risk when you're younger. Kevin O'Leary says the same thing. You know, you can afford to take the risk, which you can.
Yeah.
But if you're just taking stupid risk to lose and start over again, I want to make sure that you're not being scared off the market by doing that. And I don't think taking risk just means being stupid. I think it's different. I think Facebook is a high growth stock, right? So inherently it has a little bit of risk with it, but it takes a little tolerance to own stuff like that, especially for the long term.
I think with the risk tolerance, the problem that people misgauge on risk is understanding time frame. The higher risk you're going to get in whatever growth position or whatever you're buying is within a certain time frame. If you're only buying it for a week, like your risk level is beyond large. But if you're going into it with the mindset of 3 years minimum, that 3 to 5 year mark, like that, the day I learned the value of that is the day I started getting rich, because that's when I was holding Canopy for 3 years. That's when I've been holding Tesla for a year and a half. Like, I don't think people grasp that you will never make those home runs unless you have that perspective of being in it for X amount of time to let things happen and come into fruition. People rush things along a little faster than they like to, considering these things go parabolic overnight, but you're not going to catch it overnight. You're going to have to catch it somewhere in the volatility long before. So, I mean, people kind of have to, ease into some of that.
Bobby Yeck, shout out from the Independent Investor Channel, man, for sure. All the best to you for sure. I typically, it's really interesting too. We come on this collaboration. I'm so passionate, man, about this topic, and I love having Kyle on because Kyle's the same, passionate about it, and come from a different side of the sphere, But I tell you what, we get so far along the path of trying to drive and improve people's understanding. Life is good, man. It really is. But
You got to,
it's a gift. It really is. It's tough. It's tough. It's tough, man. You're always evolving. I think the older I get, the more I realize that I don't know.
that's the problem though, man, is you end up letting go of that that less conscious self, and sometimes that becomes a huge hindrance, because like, as in my short age here, but I'm already starting to experience that, like, the way I approach things comes with a much more schizophrenic aspect in my mind than it used to, and I always catch myself doing it.
You mean
And
you were more cautious? You were more
no,
cautious
no, no,
when you
no,
were
no, no,
younger?
no. I'm saying as you get older, like, you find yourself making more of these well thought out, to the point where, like, you're
I am.
tripping over your
I
thoughts. Whereas
think
back in
so.
the day,
I think so.
you
I agree. I agree.
back in the day, you're excited. You're like, it reminds me of a young Will Smith, right? Like, I always remember watching Will Smith a little while ago saying that, like, he's trying to get back to his younger self, because when you're carefree, you can still educate yourself, but have that same, less schizophrenic mindset. Because I always find myself going down the rabbit hole of the directions and the maze, and then, like, you just get overwhelmed when usually the simple stuff you took off in the beginning would have been enough, and you kind of got to get out of your own way. But that's what I'm saying about, like, taking on safer risk too, right? Like, people that want to focus on the safest stuff for the longest period of time because they're just so hesitant is usually a hindrance more than it is a benefit in the long run. I was also reading another really fun statistic the other day about, and I think I just saw Graham Stephan talk about it, which is why I was so flabbergasted that he brought it up too, was that people that cost average into stocks are actually hindering themselves more than dumping it all in at once. I can't remember the company that came up with the statistic, but they found out people that when they were buying individual stocks that bought a larger amount at one time, over time actually did better than people that cost average in over a longer period of time. And I don't know if that has to do with a lot of people just catching it, or maybe it's the fact that they're not constantly, getting trade effects, or now that, trades are free. But I'm curious to what they analyzed to come up with that statistic. Because I mean, I find myself doing that usually where I make big chunks of investments, and maybe that had something to do with me doing a little better.
Yeah,
But I
I
was
think so.
so
I think
advocate.
so. I think
I was an
so.
advocate, man, of the cost average, but now I'm questioning it. I'm like, maybe it's not the best thing to be advocating.
No, it's a strategy, man, but I think it's a lazy man strategy. I really do. Like for example, if you're not solid on what you're looking at from a technical or fundamental perspective, right? What's keeping you? If you've got a stock that's really dialed in and you've got it at a good buy point and you believe in your research, you could be wrong, okay? But if you truly believe in it and you've proven yourself, then go big. That's what I've done with a lot of my swing trading. I'm an opportunistic buyer. I really am. I'm not just going and looking at throwing money at a stock in a big way, no matter what the price is. Um, and I think when you do that, if you're looking to buy the stock for 20 years, yeah, you can add to it over time. But what research is necessary to do that? Again, it kind of
Yeah.
comes back to the research, and you'll be paid for your research if you do research enough to hold off on a stock. For example, show some patience on it. I think on the sell side, that's the hardest decision to make. I think the sell side, holding's easy. And I think buying is tough. Buying and selling is tough. Holding is the easiest decision, I think, and underutilized, in my opinion.
Yeah, the hold strategy while we're all sitting here giddy watching Tesla fly through the roof.
I have to.
That's
I have to. I became an investor in it with my little share, my little partial share.
Hey,
With
that partial share is still something. I mean, that's an
80.
impressive gain on a tiny amount. You could say, look, I turned this into that. That doesn't happen hardly ever.
It doesn't, man.
Uh,
300 bucks. My M1 finance pie is like, I've got this little offshoot and it's Tesla. It's crazy, man.
that's
But
funny.
yeah,
Oh, man.
a lot of fun, man. Anyway,
Yeah, we're still trucking along. I'm not enjoying the winter days here, though. It's such a slow season for me. My dad I dropped him off the other day at the airport. He's going to Vegas, which
nice.
was an interesting topic. He should hopefully be having fun. Trying to travel a little bit still here, too, man. Trying to get out and kind of keep my mind fresh. I'm thinking about maybe going to Holland to see some family in September.
Nice.
I try and do the travel once a year. Do you get out a lot at all? Do you get?
Yeah, we have our trip booked already. We're going to Europe for 3 weeks. We try to
Oh,
go
nice.
every year. Last year was St. Martin in the Bahamas, in the Caribbean. St. Martin, that's a nice spot. But this year we're going to Croatia and Czech Republic, which
Oh,
is my
nice.
wife. My wife's home. My wife is from Czech, so
Oh,
pretty
even better.
awesome.
So, yeah. I think
Yeah,
it's important to
she
get out
speaks
once
the
in a
language
while.
for me, man. She's
That
my she's
helps.
my European ticket for sure, man.
Tour
So I
guide.
can eat, not starve to death.
Yeah,
For
but
sure.
I think people need to get out of it. That's the only thing I really spend big chunks of money on. But I try and keep doing it once a year. Try and find some meaning for some purpose to where I'm going, and it really refreshes your mind. Because what do they say? America. Everyone looks into America, but anyone that lives in America doesn't look out too often. And I think that they got to remind themselves, like you're saying too, with like the coronavirus, right? Like I think people close off so much from it that if you were living in it, it would be so much more, important than it is when you're not looking into it. But I'm buying some. What is that? IK pins and WBA, or is that LK? What is that there? Let's take a look and see what we're buying.
Yep.
Yeah, throw some stocks up, guys. We're just chilling, hanging out. I'm going to try and get a little bit more relaxed and not be so uptight about everything here. I'd love to check out some of the stocks. Oh, a coffee stock. I
Yeah.
traded in at a Starbucks as a stupid decision. Didn't buy a lot of it. Sold a lot of it for nothing. Made no money on it, but thank God I bought some good stocks after. Not saying it's not a good stock. I don't know why I bought it. I think I was just too busy listening to PPC in for too long. And I'm like, yeah, maybe I'll
Yeah.
buy this. Maybe I'll buy
Uh,
some 3M. Maybe, yeah, I
well,
don't know what else.
the Gen X,
Um,
Gen X, Gen X does it right with Starbucks for sure. He's got a larger position in the stock. It is a great company. It's number one in that particular aspect, and you know not quite a sin stock, but Starbucks is my favorite. I've made good money. I'm out of the stock right here, but
Yeah.
yeah, I sold in the 90s and it dipped. I was tempted to channel it and buy it again, but I didn't. I'm out of it. I'm being really, really close to the vest with my buys right now, and I'm happy. You know, I mean, $250,000 exposed to this market. That's good. People would think, oh, you're crazy. You're going too defensive. Yeah. Okay. Yeah. Maybe. We'll see. We'll see. It's the
Only
sixth
time will
sense.
tell.
It's the sixth sense, Kyle. Yeah.
I'm
Yeah.
looking at this coffee chain this guy sent over. I'm trying to find the fundamentals here because this company isn't trading at a positive P or anything, but man, it's done pretty well. It's a Chinese coffee chain that opened up 4,260 shops since 2017. It's up 100% in the last year alone, and I'm trying to figure out why that is. Because man, oh man, what a interesting stock here. I don't have the 2019 report. 2018 was a nightmare. My goodness, how did a coffee chain lose $1.6 billion? At least they
Wow.
made 900 million that year. I mean, that helps
Wow.
make up for the loss. But man, you guys find some interesting stocks. Like you think you've seen it all in the stock market, man, and someone throws something out, and you're just mind boggled by how did you find this? It's just like that edit stock. If you guys are bored, go look up the ticker symbols edit and just look at their videos. They'll blow your bloody mind at how advanced we've come in genetic engineering. Some wild, wild stuff. But yeah, I'll have to look deeper into this one. What else we got for suggestions? AbbVie took off. Yeah, I just don't know AbbVie well, man. I know a lot of people did really good with it. Saw the dip, but I just have such a hard time buying pharmaceuticals. I look at their time frame they have. They're always limited time frames for patents, and I'd rather own Johnson & Johnson that gives you exposure to, like, you know, women hygiene. You got Tylenol. You got the whole spectrum of the health sector with long-term patents. So I mean, I'm just not comfortable with it. Do you own AbbVie at all? Are you
I do.
an AbbVie? Yeah,
I
I think
do.
you were saying that earlier.
Yep.
Um,
I bought it on the
yeah,
dip. That was a good one.
that
Yep.
was a good one for sure. Definitely jumped up a lot. What are we sitting up 43% right now from the bottom?
Yep. It
But
went
yeah, I
down to
don't.
54, I think.
It's the same problem I'm having with Carnival Cruise right now. Is like I look at Carnival Cruise and I'm like, that's going to be one hell of a buying opportunity in the short term here. But man, I just can't. I don't know why. It just doesn't fit my philosophy. I always have a problem with like the theme park kind of. You have to go out. You know, I don't know why. I just same with the MGM and all these kind of like you have to want a vacation there. I just feel like they're going to be the worst for recessions. I like those products that you can just go pick up. It's very simple. You know, understanding the cost and exchange. With those trips, it just I feel like there could be a time where all of a sudden it sucks back big time, and I don't think it's going to happen anytime soon, considering their balance sheet has been growing amazingly. But I always try and think long term out, and if I'm going to be holding these things for maybe 5 or 10 years plus, in the long run, I don't want to take on that kind of risk. But it depends on your investment style because that might not be risk to some people. But when I look at my portfolio, the things that I'd rather own are energy, financials. I only own a few sectors really. My biggest tech stocks are my highest risk now that Facebook's added. I've only got 4 of those, and everything else is just mainly utility, financial, a couple REITs, and my sin stocks. So I mean, I'm pretty happy with that simple exposure.
What's the REITs, Kyle? You see Ronald Willis is throwing
Yeah,
off there.
I've been really advocating this, but it hasn't been doing as well as small cap REITs here in Canada. But I've been really loading the boat on. I might be buying more Geo Group, my prison REIT, and I'm also buying a RioCan, which is in the top 3 largest Canadian real estate investment trusts. But I'm only buying it because I understand it very well, and the real estate that it owns is beyond premium. And here in Toronto, they're going to be building. They're forced buying out the train tracks that run right through the city, and they're going to build an entire park above it. And RioCan has like prime real estate for a mall and like this massive apartment that they're putting up, and they just own amazing real estate. But if you compare it to something, say like a TNT, it's called TNT.UN. It's True Canadian North, and it's a really small cap REIT that has just been crushing lately. It was paying out a 10% back in the day, and in the last year, it's run up something like 20 or 30%. It's done phenomenal, but that's because interest rates are super low in these small cap kind of commercial REITs. I've done really well, but I try and avoid the small cap REITs because I don't know why. I'm just way more attracted to large caps. And I feel like I'd rather own premium at much less of a gain than knowing that it survived the 2008 crash. It's been around for a while. And I understand their properties fairly well because I drive by them on a daily, not a daily, but on a regular basis enough to actually know where they are, which makes me a lot more comfortable with what I'm buying.
What
And
do
their
you
PE
think?
is still,
I've got a
sorry.
couple on discretionaries. Lowe's is one and TJ Maxx. But do you have any? I don't know if that's one of the sectors really that you've got some exposure to. Kyle, do you got any ideas there?
Would consumer discretionary fit in with the sin stocks? Pretty much like my BTI and my MO. I don't own too much. I did used to own Procter and Gamble, but I got rid of that one. I don't know why. I should have kept it because I was trading it when it was a lot cheaper too. But I can't remember what I even ended up buying with it instead. But yeah, no, I love consumer staples because those are the companies that
Yeah.
that's why I love my sin stocks, because not only is it a consumer staple, but it's a crazy addiction that's pretty hard to fight. I mean, it's pretty funny in that aspect of things. So I just love it for that reason. I grew up in a small town. I mean, I've seen quite a lot of drugs and things floating around in my day, and that's why I was so attracted to like the marijuana industry and stuff, because like it's just people cling. It's so historical in our DNA. It's been around as long in the history books as gold and precious metals. And any drug, like people underestimate caffeine as a drug. I just did this little experiment where I quit drinking coffee for a day because I got so tired of peeing so much, but I'm having like 4 or 5 cups a day, and I stopped drinking and I got the worst
It's good for the
migraine of
spirit.
life. Yeah, I looked it up, and it turns out the #1 side effect of coffee is severe migraines because your blood constricts. So if you're a heavy coffee drinker, so many people experience severe migraines. So I had half a cup of coffee just to see if it would go away, and sure enough, in 20 minutes, my headache was gone. And I'm like, man, I think keep forgetting how much of a drug this is. Like, this is a drug that has side effects, but kids are drinking it in pop. Like, it's kind of it's why I love coffee. I love, like, I would have classified when I owned Starbucks, I technically classified it as a drug stock. Like, I think people underestimate the value of how sustainable those industries really are, in my opinion.
Yeah.
I just, when it comes to consumer discretionary, I'd rather own them than Coca-Cola. But that's just my, again, personal preference, especially at the current valuations. But I was pumping that all last year. I'm trying not to talk too much about my sin stocks because I did way too many videos last year on them. Even the so what else is going on? We got Wells Fargo. I noticed the guy threw up Wells Fargo. I've been recently buying Wells. Wells was one that I added to my list. I wish
Easy.
I hope
That's an
it
easy
I hope it
buy right
stays
here.
down. Hope it stays down because I've
It's
only
not
got
going to go
500
much.
in it.
It's not going to go much further lower than
It's just got to
this,
trend
man.
sideways, just for the next 3 to 6 months. Just trend
Yeah,
sideways. I just
it will.
try to build up my initial position here because I'm just buying it
Absolutely.
with little bits of cash at a time. I had a big debate in my head, either Wells Fargo or Facebook when I sold Tesla, and I'm like, I'm gonna go all in on one of them, but I ended up going with Facebook because I'm like, you know what, I think Wells is gonna have a slower pace, so I might have more time to buy in, and I figured I'd load up on Facebook instead. But man, Wells Fargo right now is, I always wanted a US bank that paid a high yield like a Canadian bank, and they don't come by very often. So to buy this one, I think is a really good opportunity here. Considering the
PPC,
money they
that was
make.
that
Sorry.
was PPC Ian's position this year. I think he loaded up on Wells Fargo. I think that was his bank play. Which one?
Yeah. A lot of people like the Canadian banks, but the problem is they seem to underperform the market. But I love the dividends. They keep coming in. I'll reinvest them into whatever. I never put them back in right now just because I got good enough exposure. And the way I've kind of cored my current focus in the portfolio is to get those big, juicy dividend stocks built up as fast as possible, because then you're just really adding capital to the fire. Who really cares if they go up if you can just get those yields? So I saw the Canadian banks as an opportunity, but I have not seen any capital growth in a while out of those things. And
Oh,
my neighbor's an older dude, and he will buy nothing but the Canadian banks. And every time I talk to the guy, he's just constantly like, why would you buy anything else? Why would you buy anything else? I'm like, if I had $1 million and I was retired and didn't really care, yeah, sure, I'd just own banks. But
yeah.
I'm like, it's been a limited part of the. Have you ever looked at the S&P TSX?
Mm-mm.
I could throw it up right now. Once in a while, when I do my financial, when I show my percentage gains, I sometimes throw up the S&P TSX, and it is abysmal compared to the S&P. Absolutely abysmal. It's painful to actually look at living here as a Canadian. Like, it honestly kills me inside, considering I think I own 80% of my portfolio right now in US. Like, I'm heavy out, and I've even opened up US accounts, man. I'm bringing in all USDs now. I'm not even converting it back. I'm like, if I need the money, I'll control the conversion. But for right now, I'm heavy stacking US, because Canadian dollars, even now the Canadian dollars dropped 2 cents in the last week. So I mean, when that happens, like, man, that really bumps the value up. But that's heavy risk. I made a video recently on Canadian real estate talking about how people severely overlook the value of the Canadian dollar in our real estate. I mean, you could see it go up and you could get the adverse effect on the opposite end. But I mean, if I'm not willing to trade it back to CAD, I should be okay for now if it does decide to rebound. But when it came to real estate, I was showing a number that said comparing Canada to the US, and Canadian real estate is outperforming by almost like 40%. But the thing people don't calculate in over the last, 8 years is the fact that our dollar has dropped 25, 30 cents. So, I mean, if you factor that in, we're just at par with the US. Like, we're not really that much higher than it. But it bothers me people don't see that reality when you start diversifying. Like, same with you own BTI, right? Like, I mean, if you own BTI, you're exposed to the euro. And now that the European Brexit is finally getting finalized, you're seeing a huge upside in all your European stocks. And even though it's trading back to US, I mean, you're still technically hedged through a different dollar, right? So if the US dollar drops and the euro rallies, all of a sudden the income that they're paying out is actually going to go higher for you. So, I mean, that's a thing people should probably pay attention to. It took me a while to learn how to actually understand that. But that's the big thing now. I made a whole video on forex trading because it seems to be the new wave for young 18-year-olds, and the new day trade is forex trading.
Fair enough.
It's a simple app you can just pop open and you can just start trading currencies. And I'm finding all these YouTube videos that are just flying about it.
People
I'm just
making
like, this is
people making money.
it's worse than gold. Trading currencies is worse than gold, in my opinion.
Oh my God.
I would rather trade gold than trade like currency, because you're speculating, you're playing trends, obviously. I mean, that's all anyone's doing. But to actually physically try and understand an economical currency and how it trades bi-monthly or daily, like, you're insane. To even think you can mastermind it, you're insane. I mean, have you ever I met some economists and I watched them do currency plays, and not too successfully, but I sit there and I have a hard time racking my brain around Facebook, let alone trying to rack my brain around what Canadian dollars are trading through what companies and oil. And oh my goodness, man, GDP. I like looking at GDP. That's fun because that changes a lot. I mean, GDP is easy to kind of get a little glimpse into the economy, but I mean, we're talking about trillions of dollars. I think it's like $3 to $4 trillion traded on a daily on the forex market. Like, it's a stupid thing to understand. Stupid hard.
That's crazy.
But it comes to the gambling aspect of things, right? There's always another trade. There's always another short. There's always another put, call option.
How has an investor like you, Kyle, not got involved in cryptocurrency, or are you?
I loved watching PPC and have his reign of his Bitcoin, because it was so against his investment philosophy. It blew my mind and I loved it. I just love that people go against the grain and they do take on some extra added risk. But I love the idea of blockchain. I hate the idea of crypto. I love Bitcoin. I wouldn't own it, but the only reason I love it is because it is the black market currency. People are using it to scam millions of dollars. You watched it with, obviously, BitConnect, and you're watching it even now with all these like Dr. Phil shows about people, transferring money to Bitcoin and giving it to someone because they asked them to do it, like just insane stuff. So, I mean, it does serve a purpose, but the reason it serves a purpose to me is worse than sin stocks, because I think people underestimate how primarily it's used to funnel cash out of countries, mobster money. It's very fluent and easy. It's protected. You can carry it on a hard drive. So I think that's where the real underlying asset value is for it. I'm not a fan of Ethereum or all those other ones. I think there's only, in the long run, I don't think there's going to be many that survive, but there'll be a couple that will, I think, for sure. But blockchain will get adopted. I can't see why blockchain wouldn't get adopted. It has real. I think that's the real value, not Bitcoin, but anyone could do blockchain. That's not rocket science anymore. That's not proprietary stuff. So, I mean, if you hold Bitcoin and it levels out, heck, it could be a great currency, but I think it's great for the reasons that people don't look at, which is, the scarier side of the dark web that, we keep forgetting exists, but goes on every day. When once in a blue moon, you see $1 billion, Coke bust on a boat. I mean, stuff like that happens on a daily basis, and we underlook it a lot. And I think Bitcoin is directly attached to all of it to a decent extent. I imagine a good 20 to 50% of Bitcoin's value is based in not people potentially just buying and holding it for the sake of an investment. My opinion, I think 50% might be investment, but that other half is holding it or trading it for a different reason. Because that's what it was invented for. That was the original invention. They say it was for, this currency against the government, but really it was a currency we could throw on the dark web so people could buy and trade things that the government wouldn't let them, right? What was that movie about? There was a kid who started it was called The Silk Road. If you want to do some awesome deep diving tonight, guys, go on YouTube and watch the documentary on the Silk Road, the first ever large multi-billion-dollar black market trading for drugs, and Bitcoin was the currency used. And the kid at the time was only like in his early 20s when he got caught.
Nice.
Yeah, and it was wild, man. That kid today, he had like $200 million in Bitcoin 10 years ago. Could you imagine what that kid would be worth today if he got away? Like, he would be one of the richest, wealthiest men in the world. And like, unbelievable what that story was. So, I mean, if you guys are bored tonight and you've never heard about it, go watch the Silk Road. I'll give you
Silk World. I got
Silk Road. Sorry, Silk Road.
Oh, okay. It's called, cool.
It's fun to see the history of Bitcoin, because that's where, in my opinion, Bitcoin really started formulating, was on the dark web. But I'll move past that unless you have an opinion on Bitcoin, or do you got any?
Not especially. No. Can't say I've ever bought any cryptocurrency. I've studied blockchain. I really like the idea, and it seems like each of these companies, I know somebody put a thread up there about IBM, and I think each of these larger companies are going to be working on their own, form of blockchain technology to secure their transactions, especially international, where the only person that can basically have the key to a specific transaction is the key holder, right? And then the key code I think it's great because it protects the integrity of transactions, and it eliminates, because it's in you can't hack it. That's the crazy part about it. It's impossible. It's mathematically impossible, That's the part that I've studied that was really intriguing to me. But as far as the currency, I don't know. Maybe it's the caution in me. I don't know. We'll see. I've never bought it.
I avoid it like the plague. I always I don't talk about it as much anymore, but I was invited to a meeting. It was called Gladia Coin, and it's very similar to BitConnect. And I had $4,000 in my pocket, and I'll never forget the moment when this lady was looking at me, and she's like, "If you were my son, this is what you would be doing." These guys were trading millions of dollars, but it ended up being the same thing as BitConnect. The early adopters made a shit ton of money, and the rest of them just got destroyed.
Wow.
But I'll never get over that moment of just sitting in this meeting with these really cocky, suited up people in this office. This guy, just the cockiest people I've ever met. And I'm looking at this, and I literally looked at the lady and I said, "So what's the game plan here? We sit and pray to our gods that this works out? Like, what is the actual business model? I don't get it." I'm like, man. She explained it for an hour, and I'm like, "So where's the business model though?" I'm like, "I don't understand. Like, we give you money, and every month you give me a 50% return." I'm like, "I don't get it." And she's just like, "Yeah, we pay you out. You get paid out in Bitcoins. You can even sell them as soon as you get them. We double your money every 3 months." And I'm like, "Do you know how absurd that sounds to me, even as a 23-year-old, and you're like in your 30s or 40s?" And I'm sitting at this desk somewhere in this city in Toronto, and I'm like, this sounds absurd to me. I'm like, my buddy hated me. It was my buddy's dad. He was like in his 60s, and I was reaming him out, and I'm just like, this seems like some kind of Ponzi scheme, right? I'm like, this doesn't make sense. I'll never forget that meeting, man. That solidified my intelligence. It made me feel so good inside when I watched all of that unfold, to actually see and be at a meeting that was so private, and just to see these guys. And oh man, what an experience. Mind you, if I did buy it at that time, I would have made a lot of money. Don't get me wrong. But at the same time, to have the intuition and to see it play out the way I thought it would, especially being in that moment with that cash and having that debate in your head, I got $4,000 right now, but oh man, it was the toughest debate I've ever had, man. But what a way to solidify my, somewhat, try not to be too cocky about it, but it made me feel good inside. I refuse to buy Bitcoin. Imaginary monopoly money. Yeah, but man, everything is imaginary. Regular money is imaginary. It's a piece of paper, bro. What do you?
Fiat currency.
It's backed by nothing. What's real about paper?
It should be. It used to be backed by something 40 years
Yeah,
ago, but 50 years ago,
that's
yeah,
that's the funny
hasn't been
thing too,
backed by
right?
gold for a long time. Yep. It's all
Like
just
you,
a facade.
it really is. I think that's the other perspective people forget about too, right? Like, sure, it's an imaginary, Bitcoin, but
Mm.
it's no different than real
But
money.
it, but it's not really, because just like money, right? It's putting a value on a particular transaction, right? Somebody
Yeah,
is selling a service, somebody's receiving that service for a payment. So really, that's the way I look at Bitcoin, is based on the integrity of the transaction, or maybe even the size
yeah,
of the transaction, the sensitivity of the transaction, which all could have inherent value. Now, there's where Bitcoin starts to get a little bit attractive. Is it attractive for it to be in the independent investor channel's portfolio? Nope. But it's intriguing enough. The staying power is, I think it's worth acknowledging. I thought it was going to be gone away. And now I believe it's here to stay.
yeah.
Okay.
It's
So
holding up. It's doing really well actually. If you bought the dip, it's been an incredible. I check up on it all the time, but it's fascinating to see how it is holding up. Let's pull up the chart. What's it trading at right now?
personal
Yeah,
finance
12.
channel says I'm not a fan of Bitcoin. It's too risky. There's well, and that's really where you draw the line, honestly. I mean, I'm not a gambler. I used to play cards. I don't play anymore. I do the stock market, and that's the extent of my risk profile. And there are riskier investments. There's options. I don't trade options either. So
Well,
to
you
each
could
his
get
own.
a you could take out a student loan and go to school and say you're taking on less risk. I
I,
mean,
I did. Yeah, I did.
yeah, you've been through that too, haven't you? You've been through the
Hmm.
student loan cycle. I think I shouldn't
Yeah.
I shouldn't talk down to the people. I was 20 grand in debt when I was 19. I've been there, so I should
Yeah,
have some little
you think you're doing the right thing. I think I did it
100%.
backwards, because now, I mean, I'm in the military and I could go to school for free. And for people
That's some
just
of the best advice, man. Best advice, honestly. I'm not a person that could handle the army. I went to cadets when I was a kid. I grew up on a farm. I hated people telling me what to do. I was a run-free hooligan.
tough.
Um, but I think the army is so understated. I think it's one of the best jobs you can get into. My buddy joined it. He's traveling the world. He's making
Yeah.
crazy money. He's going to be retiring super young. He
Yep.
gets one day off to go wherever he wants, and they pay for his flight. So instead of going home, he'll go somewhere like, I think they're doing missions in the Ukraine, just peacekeeping missions, just trying to keep Russia cool, nothing crazy. But the stuff he's experiencing, I'm kind of in awe of, because I'm like, wow, you're really doing something amazing here. Considering, if you don't have a girlfriend, you're not really tied down. I think it could be life changing for anybody. And there, what's the gentleman's name you had on here before? I mean, he's in the army as well, right, in the U.S. Can't remember his name off the top of my head.
Hmm. Jamie.
Yeah. So I mean,
Yeah,
you talk
Jamie's
to
in the
those guys.
Ukrainian.
If you're
Yeah.
having a trouble and you want to make quick money at a school, you can learn a trade for free, get paid to learn it.
Oh yeah.
I don't think you just, like I said, I was a hooligan kid, man. I still am now. That's why I've never, I haven't had to fold over to a boss just yet. So, I mean, I've been doing that for about a decade. I have a hard time dealing. I'm too much of a management dude. Like I have to be in management control to an extent. And when I don't have control and I watch people make decisions, the reason I lost jobs, to be honest, I lost a lot of jobs that I used to work that were good full-time jobs. And it was just because I looked at how they were managing the company and I couldn't stand it. And I ended up getting fired because I wasn't going to be 100% in. I wanted to be behind the scenes. I'm like, I don't want to be, your sales guy or this or that, because I don't like what you're doing. They don't like when you tell them that. They do not like when you tell them that. But I mean, I was an employee. What do you want from me? I'm like, I don't like the way you're running this. I don't see this going anywhere. I'm like, I'm here to do my job. Don't give me
Yeah.
any more authority.
I'm
Um,
going to shout out to Bobby Yeck, man. He's been dropping some pretty awesome comments. So shout out to Bobby Yeck for sure. Pretty interesting stuff, man. There's countries right now fining people for using cash. So
yeah,
just along the fiat currency argument, I threw Dave's comment up there with hidden freedom, and probably the number one systemic risk, I think, to our stock market, to be honest with you, is the amount of government and corporate debt that we have going on right now. That's it's
it's
tough.
a tough debate, man, because you got to look
It
at the
is.
economy. It's also a result of the economy growing. I mean, the argument against this market rally we're having is, yeah, we typically have crashes, but we've never typically had quantitative easing. I mean, it's people don't look at the factors of how much the markets have changed, right? Like we've always had a lot of debt and stupidity, but quantitative easing it changed the market in a way no one
For
could have
money.
imagined. But now the thing is the market is somewhere where people couldn't imagine it back then. Because we had this same discussion before, right? Like trying to tell somebody in 2008 that there was going to be trillion-dollar companies banging out by 2020 like it's nothing. Like they would have laughed. And looking at something like Apple making $200 billion was even laughable at 2008. Like that wasn't even an option in the imaginary world of the markets. So I mean, it's really tough to gauge what is overvalued. I think I'd like to say we're due for a correction, but I wouldn't never invest based off that advice, just because it's, again, it's a risk assessment. Yeah, if you want to do what you're doing and pull the cash because you're a little older, absolutely, probably the smarter decision. But to sit here and say the market's overvalued just because these companies are still trading, a lot of these companies are still trading within reasonable PEs. I mean, Apple's not trading at a 60 times multiple here. I mean, we're only at a 25. I mean, it is high for Apple, but if you went back to 2008, that would have been absurd. Like for Apple to be trading at these numbers, the PE would have been unimaginable. It would have been like Tesla's PE now. So, I mean, to say it's overvalued is hard to gauge against the GDP, right? Because if you added up all the market caps of the largest companies, I mean, how much does that compare to your national debt? I mean, that's the debate that I usually have. I look at all these big cap companies, add them up and say, how much is that debt? If you're leveraging that debt off our assets as a government, I mean, what are those assets in total worth for the economy? So, I mean, that's usually the economical debate that I have with myself, though obviously it's hard as hell to gauge and be intelligent at, but it's a fun thought experiment, just like trying to trade forex. It's a fun thought experiment. To get it correct is impossible, but it's fun to think about.
I'll take a quick opportunity. I anticipate Gen X dividend investors video probably sometime this weekend. Gen X has not reached out to me at all and asked me to plug that video, but certainly we're going to want to keep our eyes out for that. I kind of have an idea what stock
Is he doing
is
final
the number
reveal?
one. It's doing the final one. Yeah, so definitely a shot out. I'll just kind of frame my shot out like I always do. What a body of work that's been. Holy moly. I mean, I just can't imagine the amount of time. It seems like it comes fairly with some ease because they look like a professional production, to be honest with you. It took me long enough to know how to do a screen video, let alone stuff like that. But keep your eyes open for that. I usually wake up Saturday morning and see it pop in there, and I'm always glad to support that. But I want to see which one's number one. I think I'd put money on my thoughts, but I don't want to spoil it either. So gonna have to tune in.
Oh, that's no fun. I guess you could pretty much, if you sat here long enough, you could probably figure out a general size.
Probably.
Well, I'm curious. Well, I want to ask you because I don't know.
It's not Tesla. It's not Tesla.
Well, no, there's no way it's Tesla, but
I don't know.
Well, it probably, you know what? Yeah, it looks pretty obvious if you look at the last video that he posted, because there's probably one in line with that stock that follows a similar suit to my portfolio.
Yeah, I'm looking at his pie and I'm like, where's all the technology, bro? Like, that's an awesome portfolio, but where's the technology, man? Come on, give me some love on the technology.
Just to put this in perspective to anybody that hasn't watched Gen X, he's making almost $1,600 a year off Microsoft. And if you've been in the market long enough to know what Microsoft's yield is, you do the math. Even if you bought Microsoft at $100 a share, you do the math. I mean, and that's the newest video. I mean, he's been posting each. How many stocks has he posted so far? I think he's got a few, a decent chunk, a few for sure.
I think it's pretty amazing though. I don't know if I could name someone who's more devoted to. He's everywhere. For supply, I don't do that. I can't find the time to do that. So my hat's off to actually the support for somebody who, again, is probably in that category of somebody who doesn't have to do that, but does it to such a high level, and also to offer the Discord as well. That's a cool opportunity for people to come on and find another avenue of chat. With the dividend aspect. But what a great resource. From my understanding, it's free of charge too. That's crazy. You just don't get that value anymore in this day and age, man. You don't usually have to pay for that level of. And I think he's doing it to kind of spite the system a little bit. which I like. You know, I think he just does it because he can. It's that simple.
Yeah, and he's got just a fascinating individual there too, and he puts a lot more time into the community. I'm trying to divide my time up and figure out how I can best leverage it, because I don't think posting a video every single day is the most beneficiary as compared to being in the community as much. That's why I try and keep doing these live streams, because it kind of interacts
Maybe.
me with a lot of the community, and I find my subscriber growth does better when I'm
Okay.
interacting, because you gotta interact, because I find when you talk to people, they'll come over to your channel. If you reply to comments or you see an interesting comment, it's thoughtful, I find you end up getting a lot of growth. And I noticed Gen X is, like you said, all over the place with fairly thoughtful, intelligent comments, not like those typical. I have a few guys on my channel that I noticed that'll just post just to get a comment in there to be seen, because they didn't watch the video, which I'm fine with. It doesn't really bother me at all. But
Yeah.
I think Gen X does a fabulous job at that. That gives him his channel power. But yeah, I'm still debating on at some point when I'm going to cut back and start focusing on better quality videos and trying to spend more time with the community. But in this early days, I think volume is more important. Depending on how you look at it, I feel like having a good repertoire of videos when you start making better ones is better for. I guess that's a debate. I don't want to say that's right, because I mean, even Gen X is doing extremely well for the few videos he posts. But somehow I still think I'm
That's an
getting.
anomaly.
I
That
still
that's
think I'm
an
getting.
that Gen X angle, that's an anomaly. It really is. And I shouldn't really be giving anybody advice as far as growing a channel. That's for sure, because I haven't got it figured out, It's
It's
tough. It's
community based.
tough.
It's
Uh,
it's community based, man. For as long as I've been doing the social media stuff, it's all community based. Like if you're involved with the community, they listen. I think it's one of the major factors to getting to YouTube to grow faster, is because that's why I do live streams. Most people don't do live streams. It's hard to connect. So I mean, like Gen X is sitting here and he'll be doing, he'll be chatting to all these people, whereas I don't have the time because I'm too busy building the content. So then I'll come on with somebody like you, and then I have extra content, and I find it's a really good way of engaging the community. Try and send out emails once in a while and find people that I can chat with where we can share our communities. Like if you're not getting involved in the community, your YouTube channel will probably become a little bit more abysmal if you're just relying on people to
so
find it.
I've mentioned this before, Kyle. Like my average view time on these live streams when I post them are right on the mark, in between 22 and 25 minutes on an average. See, I think I suffer from that. I really do, but I do it anyway, just because it feels right. I'm going to do what I want to do on the channel anyway. But I'm not really sure. It's just kind of morphed into a 2-hour product because it feels right. But
Yeah, it's
I'm
a
not sure. I'm not sure if it doesn't suffer.
see
You got
it's a hard
you got to get
hard.
you got to get people to retain. You got to retain people. If you're going to retain people for 5 minutes, that's the key. If you can retain them for 15 minutes, great. But if they're tuning off 7 or 8 minutes into your video, you can suffer from that.
But it's a hard debate, right? Because I mean, you could try and do the Gen X way where you're posting less videos, and it looks like he's getting more growth and more viewers, which he is. But at the same time, I'd be interesting to see what his actual channel watch time is. Just because he's not posting as frequently, sure, he gets 2,000 views a video, and it'd be neat to see how that accumulates over time. Because I'm posting daily, and right now I'm getting about 1,500 to 2,000 views every 48 hours. So I'm getting 1,000 views a day almost. And I don't know if that's because I'm keeping up with the regulars and getting the new subscribers and, sometimes
Mm.
hitting the algorithm. And I
Yeah.
don't know if that's making me more ad revenue perhaps than trying to do it. It's a hard debate, right? Of trying to figure out what the best method for pulling YouTube off is. Because if you compare the channels, you could say one channel is doing better than the other, but one doesn't post as frequently. And I think that could end up bringing down your total, amount of views, how much
Hmm.
time you're getting out of it.
Yeah.
Because if those videos don't take off and you're not retaining those regular viewers, I mean, at some point, like you're going to start seeing a drop off, right? Because I
I think
find if I
so.
don't post on weekends, like my videos, when I don't post for a few days, like my views drop to about 800 every 48 hours. And it seems to sustain
Yeah.
around that 800 mark. But that's a big difference than me posting daily. Like daily, I'm bringing in, an extra $50 to $100 a month of ad revenue that continues to seem to grow. So it's
Exactly.
a tough debate. It's a tough debate. Playing.
That's a dividend right there, man. That's the passive income investor dividend right there. That's legit, you know?
Yeah.
I mean,
Um,
it's got unlimited upside potential, man, too.
that's why I love it, and that's why
It's
I'm lucky
key.
that I can put some time into it. It's going to be fun to see where this goes in a year or two. I plan on primarily focusing for this year At some point, I'd like to go back to doing my regular job because I love doing shows. I got a good lineup coming. I'm going to run into some issues with my job where I might have to make some extra content to keep up for the days I'm not going to be around. But I'm mainly focusing on this just for this whole aspect that it seems intelligent, because I mean, doing shows and stuff is fun. And doing what I do for a living is great. But
You
at the
still
same
do that,
time, like,
right? You still do
yeah,
that? That's
all the
cool,
time.
man. That's cool.
Um,
That's really
I
cool.
think I've got 10 or 15 shows coming up over the March break week. I'm doing some
Super.
resorts, a bunch of libraries.
That's cool, man.
They're all 1 hour shows. They're a lot of fun, man. It's all kind of audiences, kids, adults, corporate. It's gonna be busy. March will be really busy. But the problem is I love that, but that doesn't have the sustainability that in the security. And I don't want to put anybody down in like the artistic fields, but like to see a really successful person in any industry, whether they're a singer, magician, like Copperfield, whatever, like the chances of you pulling that off, even to making a full-time living at it, is already pretty much impossible. Like, because there's no roadmap for it. And 98% of people that attempt it are just going to fail and have to go back to a regular job. But in my personal opinion of doing it, I know I can sustain it as a job, but it's not going to be a super, super wealthy off the hop. Like, you could put 10 or 20 years into. I know people that have put 30 years into it as a career and have never found real success in it. I mean, I've been fortunate that I'm able to bring in 20 to 30,000 a year off that job, but that is
Yeah,
not that's near poverty level income here. Like that's
I
just
know.
minimum wage.
It's
But
expensive up there.
the value in it to me though is my time, because like I don't have to work nearly as much doing that job to get that 20 or 30K than I would have to work a regular job.
I
So I
got
work,
you.
you know, on over the scale of it, I'll only really be working 2 days a week to achieve that. And those 2 days a week are only for a couple hours at a time. So it's not like the value to me is being able to do this stuff. Because I think if you're getting into those kind of career paths, like you're gonna be in for a horrible surprise. Sometimes, like Kevin O'Leary says, you just got to take it out the back and shoot it. I'm never going to quit being a magician. It's part of my soul. I mean, it really helped me when I was younger. You know,
That's
it
cool.
kept my head out of bad times. Being around drugs and stuff, man, having an
Yeah, man.
escape like that and
Yeah,
finding a way
man.
to make money at it at a 16-year-old, like it probably saved my life to a large extent. But at the same time, sometimes you have to wake up to reality and be like, there's only two ways to do this. And it's like, you either have to go hardcore, get a cruise ship contract, do it the right way, but then give up on everything else and come
Yeah,
back to nothing. Because when you come back, I'll lose. Like if you do a cruise ship, say, you could make 40 to 80, even 100 grand within a year.
yeah.
But when you come back, like that's it. Like that's where it ends. I mean,
That's
so
crazy, man.
that's like the reality of it is you can make a lot of money really fast, but it's not sustainable. So I mean, that's the artist dilemma. And I like sustainability, and I think being a magician gave me a really good keen, like, you know, looking for those ins and outs and those things people don't look at, which probably is what's helping me so much in the stock market. But yeah, it's interesting. It'd be neat to see what other people are doing for careers. I know a lot of people take regular career paths, but my career path is actually what led me into the stock market, because after I started my own business, found success in it, had no more debt. I mean, the first place I went to was like, what do? I want to find other businesses. It's fun doing this. Is there a way to do other, get involved? That was literally the question I asked my mom. I was just like, is there any other thing out there that I could get involved with other people's businesses? And she's like, have you ever looked at the stock market? And that was like the life-changing moment for me. I mean, so I mean, I had to take those steps to get here. I think everyone has their own way to getting to this point, but that was mine for sure. But on that sweet note, I think I'm going to head off here, man. We're getting pretty late.
It's
We've already
awesome,
been
man.
running for almost that 2 hour mark, just
Yeah,
hanging out.
it was fun tonight, man, for sure. It was a good time. Kind of a break from the norm, rotating people in, but nobody dropped into the studio tonight.
It's such a shame, man.
Oh,
It's such a shame. You guys should these guys here, man. Everyone in the comment section, like you guys could pick up your you know, hook up your Wi-Fi. It won't cost you anything. Call in, have a chat. You don't have to put your face on. I mean, we've had 18-year-olds call into some of our streams, and it's great when these kids come in because you know
yeah.
they don't have that fear of being on camera yet, so they're so pumped and so used to it that
that
they
that
they
one
come in.
that one
Yeah,
kid that night, that was freaking awesome, man. And
that
I
was
had to wait a little bit
amazing.
because Matt split up the release.
Yeah.
But I finally caught it, and that was so cool, man. That was cool. There's little roots of that right there. Hopefully, and you don't. I don't know if you keep in contact or if he's kept in contact with you guys, but you know what an opportunity. Jeez Louise. I always deliver this message like I'm sitting like you are, or I'm myself 20 years ago, what would be the stuff that I would really want to say or listen to? And I know a lot of people in their 20s, they would come onto a stream like this and see me and be like, yeah, right, an old fogey, I'm out. 5 minutes, you got to capture them. That's where you come in. That's where you're good at it, Kyle, right? You capture them. But then again, I think there's a lot of folks too that do kind of gravitate toward my genre as well. And it's legit. There's a lot of different ways. I like having you on too, because we have different philosophies, but at the same time, we're generating some serious money in the stock market. And that's to be commended, I think, and not necessarily the money, but how did you do it? That's the deeper question.
I think that's the understanding the compound effect is harder to grasp in the beginning than it is now, because like the things that I'm experiencing now are so hard to grasp compared to what it used to be. Because this first month and a half out of the year, my portfolio is up 50 to 20 grand. I mean, I started 2018 with 100, and now I'm over 100 and just peaking. I keep peaking the 150 mark. And like, it's crazy to me that it took me like 4 years of just being nutty about saving and investing to get to that first 100K. But then within a year, I already, up to 150. Like, that can't happen in that first year. Like, that just won't happen. You're not going to be seeing those $10,000-$20,000 gains. But when you start seeing the compound effect, it's like you don't. I think there's a couple people that mentioned that once you get to that 100K mark, you can really start experiencing those 10% gains, because all of a sudden 10% becomes 10,000, whereas that 10% with that 1,000 is only, like you were saying, like it's hard to deal with 500. But it's an interesting time in the market, man, and I'm glad that you're so awesome to have me pop on, because Fridays I like to get on these streams. I really enjoy it.
Hey, I tell you what, I reward aggressiveness, and you're an entrepreneur in my mind, man. And 2019, I came across you. I came across one of the videos that you released, and it really did capture me when you were talking about your prodigy, kind of where you came from, where you were cut from, the 20 grand in debt. It's just funny, the things that stick with you, that people say, and it's like, wow, that's pretty cool. Because you got a hell of a lot of energy. It's really cool. It relates to a lot of people, and if you can turn on people to investing, then I'm all about it. I think that's really special. I think you got a heck of a future ahead of you. That's for sure. So
it'll be interesting. I keep thinking every year is going to be boring, but because stock market seems boring, but it's been a wild ride, man. It never seems to let me down.
Just keep grinding. And that's the thing, is like, I see Steve, man, I'll throw this comment up there. And that's a lot of people, aren't like me. They're not like you. They're like them. And, if they can come on to a collaboration like this and glean a little bit of motivation and pick up on something that you said that maybe you did historically, you didn't like gold investing, and why, how the hell you got to where you are now. And that's legit. It's real talk, because I know it's real, and reality nowadays is hard to come by.
It is a very
tell me the truth. Tell me the truth.
I think it was J-Mac had that gentleman on that owned like $1 million in real estate. And he was saying, it seems like you have to reveal all of your personal finances today to get ahead on YouTube. But I think that's the hole that people are trying to fill. Like, that's the hole people want, because like finance it's the hardest thing I ever came to understand. It took me years. So when I found the community and these people that, like, the first time someone showed $1 million portfolio was actually a Canadian guy that Matt knows. We talked about him briefly. When I saw him reveal his $1 million portfolio and what he did to protect himself against lawsuits, turning it into a corporation, and like, I was floored by that reality. That was one of the things that actually inspired me to start doing it, was because I'm like, look, I've spent 5 years almost hiding under the table, never talking about this stuff. The people I talk to don't want to listen to me talk about it. So I mean, like, I'm like, I should share this and see if people see similar interest to like these decisions. But I found the best thing you can do is just be 100% honest. It seems to be the real trick to playing YouTube, because the dishonest people are the ones that end up getting screwed, because sooner or later people will catch you in your lies. You got to be careful though, man. I had someone try and scam me. I had a text. Someone got my phone number and figured out that I was using Scotiabank, which is, honestly, you don't have to look hard to find my information. I don't really throw my address out there. You're gonna have to dig for that. But to find like my personal phone number and some information. Not that hard, right? So this guy
Well,
sent me this perfect fake Scotiabank website, and I got an emergency alert from Scotiabank that says there's unusual activity. You need to log into your account to secure it. And
yeah.
it just came up as a fake version of Scotiabank. And I'm like, whoever did this is brilliant, but no thanks. Not today.
Oh my God.
Unbelievable. I'm like, you got to be real careful here. I'm like, if I logged in and got worried about that, I'm like, I could have just saw someone selling my positions for fun.
I know. I tell you what, and I'm probably more naive than the rest, I mean, that's why I booted the fool at the top of the live stream. I don't have any time for that. I'd never do that to somebody. And that's good enough for me. Unfortunately, the world's not made up with that type of integrity. But at least we can do what we can do to try to advance that level of integrity, because like I said, man, me and you, we don't have to do this. There's people in this thread that don't have to do this either, but they do it for the good of the community, because I learn a lot, man, from a lot of these people in the community. It makes me a better investor. And that's part of the selfish payment that I take from being part of this, is to become a more savvy investor, more successful wealth builder. That's all. Yeah.
That's all we're all doing, right? We're all doing here. But anyways, I hope you enjoy your night. It's been a pleasure. I always appreciate you bringing me on.
It's awesome. Keep killing it. Okay. Just keep grinding. Keep pressing forward, man, for sure. We'll catch you next Friday, Kyle, for sure.
Yeah, and either way, always fun chatting, man. I love the fact that you're so sturdy with these Friday nights. It's always something to look forward to. So
open door policy, baby. Open door, man. Be well.
Stay cool, everybody.
All right. Take it easy, brother. Yeah, man.
Cheers.
Yeah, so a little bit of a change of pace tonight, honestly. I never know how these live stream collaborations are going to go, but I think there was definitely a takeaway that was offered toward the end of that stream. Honestly, I've had most of the channel creators, if you are one and you're hesitant to come on, I provide this as an open opportunity. I know there was some discussion about YouTube growth and some of the successes and discussions about how to actually successfully grow a YouTube channel. For the people who have followed me since the beginning, that's never really been my focus. I look at the 18,500 subscribers now, and I'm humbled. I'm ecstatic. That means the world to me. Just like if the channel grows a couple years from now to 25,000 or 50,000 or beyond, I'll be proud of that too. Because at the end of the day, the measure of the success on my channel, and I get to kind of drive that where I want to measure the channel against with regard to the success. And it will be measured by a certain degree by the number of people who come on and in some form or fashion, whether it be a small amount or a large amount, take the information, become a self-directed investor, and render some success in the market on their own. And that is going to continue to be the measure of success. Away from the YouTube channel, I'm successful anyway. I don't need this to validate that for me. I certainly don't. I do say all the time, I don't need to do this, as a lot of people in the thread don't need to as well. But we do it. We do it because it's the right thing and it feels right. And to come on to YouTube for a couple hours on a Friday and facilitate a discussion, I think it's super, super important to continue to provide that olive branch for those folks that are making their way in. And for the folks that are channel creators in the community, if you know family, friends out there that are struggling and they need a little bit of encouragement, bring them onto the channel. Honestly, if you picked up on a few wealth building tips every week, you could really be off and running after a year. And what did it cost you? A little bit of time. In a society that everybody wants to charge you an arm and a leg for good information, which this is, it is. And I don't apologize for it. We just deliver it selflessly. We really do. We offer it free. And there's a ton of people offering great investing information, without hesitation. I think it's an awesome, awesome opportunity for folks. Again, if I was 20 years ago talking to the younger Ryan, I would be absolutely ecstatic to be part of this community. And just want to thank everybody. I want to thank Kyle for coming on and making the live stream really fun tonight. It was awesome. Keep in mind, I would love to see a rotation every Friday come through. So if you did have an inkling to come on and spend some time on the channel, I recommend you take advantage of it, really. It's one small step in the right direction as far as advancing this investing conversation that we're trying so hard to advance for anybody out there that needs to consume it. And I'll continue to contend that there's people out there that need it. They do. They need it. All right. So with that, guys, I will leave you. We will plan to reestablish the live stream again next Friday at 9 o'clock Eastern Standard Time for any folks that are confused. I'm going to continue to run the collaboration. I think that's a little bit easier for me. I let Kyle do some of the talking tonight, which helps me save my voice. It's a little easier on me to deliberate and follow the thread and really kind of monitor who's coming to the channel. But expect the same next week. I'm going to still continue to relax on my upload schedule. That's just the way it's going to be. If you want to catch some independent investor channel content, there's 400 videos that have been posted through the channel. If you are new, you can support the channel by subscribing. Subscribe to any of these folks that make their way in. There's a good sampling of channel creators that are working really, really hard to build their message as well. We want to support those the best we can in any capacity we can. All right. So with that, guys, I will leave it. I will sign off and we'll catch you next week. Take it easy and look forward to live stream next Friday with you guys. Take it easy.